Hello friends, very good evening. I strongly believe that you all are doing good at your respective places. Friends, the agenda for today's class is to start the chapter number 8. But if you request me or willing to do the question which was asked from the chapter number 4 in the November 2020 exam, we'll firstly solve those questions and then start the chapter 8. But if you wish to start chapter 8, then we'll begin with the chapter 8, and at the end of the session, we'll see the two questions, which is from the chapter number 4, because you done the chapter number 4, you studied the chapter number 4 along with me. So I'm giving you the choice to pick up whether you wish to solve the two questions from the chapter number 4, which was asked in the examination right now or at the end of the session. Okay. No doubt we'll take the decision based upon the majority of the responses. If the majority of the students say do it now, we'll do it now. But if the majority of students say that do it at some later session or do it at end of the session, we'll do it at the end of the session. Okay. So I'll give you some time in order to respond. Good evening, Anjali from Punjab. Very good evening. In the meantime, some announcements for you. The first announcement, the chapter number 8, which we are going to do, is very much relevant for the examination preview. Why it is relevant? The relevance or the importance can be seen from the point that this time also in the November 2020 examination, which was conducted on the 29th of the November, 40 marks paper asked from the chapter number 8. The question number 1, which is on the not-for-profit sector, and the question number 3, which is related to the EVA. So, chapter is quite important and the concepts are interlinked. You could not understand the performance prism or the advantages of the performance prism if you don't understand the limitation of the performance pyramid. And you can only identify the limitation of the performance pyramid if you studied the financial performance indicator along with me. Hence, the next 4 classes, although we spent the 6 classes on the chapter 8, but next 4 classes are quite important. Don't miss any one of the classes. Okay. Ravitija said so problem at the end. Savita Rani also said problem at the end. Okay, no issue. We'll solve it at the end. Okay. Another announcement for you, which is a relevant one. In these notes, friends, some of the points are in addition to the study material. Likewise, you already know that while we done the chapter number 4, we done various concepts which are in addition to the study material, even in chapter number 5 as well. Why? Because in the week or the 2, you'll get the new edition of your study material, which will be applicable for the May examination and onward. Hence, I try to cover those concepts as well, which will be there in the books or in the revised edition of the study material. Hence, you need to control your nerves when we introduce something new. Likewise, I still remember the Mr. Neil from the Mumbai last time when we covered the EMA, Environment Management Accounting, asked me, sir, classification to kahin nahi hai. But we studied the classification. Why we studied the classification of the environmental cost? Because in the upcoming edition, it will be given as a full-fledged topic. So you must be aware about that. Okay. So this thing is there. Actually, most of the students want to do it at the end. So we'll do the question at the end. Don't worry. You have a full right not let me go. Prior to solving the question, I'll solve the question with you, both of the target costing and life cycle costing. Only then I leave the class. At 8:40, I promise to you, we'll start solving the question which was asked in the November 2020 examination. Okay. And another announcement, friend, which is equally important. Friend, likewise, in the chapter number 4, we solved the 16 question out of the 18 in the classroom itself. There are total 28 questions, which is, I believe, visible to you in the form of Excel sheet. In the chapter number 8, which was either asked in the previous examination or given in the study material. What I think that we must do at least 20 questions in the classroom itself in order to get the confidence that we know the concept. Hence, I need a support from you that you come up with the reading some of the question. Apart from that, we need to run at reasonable pace. I'm not saying that we'll run too fast. We'll run at the reasonable pace. Okay, Muthulakshmi will start with the new chapter, no issue from Madurai. Okay, so we'll need to consider this as well. So I believe that we are in a position to start the new chapter. No doubt, at the end of the chapter, I'll solve the question with you from the chapter number 4, which was asked in the examination. But right now we are going to start the chapter number 8. There are few theory concepts you need to pay attention. You may feel that why we are reading this much of the theory, but in order to give the answer to the case study, we must know the concept well. So that's why for the first 30 to 40 minutes, we'll read the theory, even though it took the 50 minutes to do so. And then afterward, we'll solving the question. I have a 7 or 8 question for today's class itself. It may be possible that we need to stretch it to the next class as well. Okay. Okay. Done. I believe we need to start the chapter number 8 and everyone is okay with this. Okay. Let's start, friend. Let me tell you a small story in order to open the chapter number 8. Friend, for every organization, it is very much important to attain the strategy which it formulates. It means performance of organization in order to achieve corporate objective is very critical. Every organization try to improve its performance. In order to improve the performance, in order to attain the corporate objective through the strategy, the company usage performance management system. So performance management system basically a system which help the organization to improve its performance. But don't you feel prior to manage the performance, prior to formulate the strategy where we want to go, we need to assess the current performance. And in order to assess the current performance, we need to measure the performance. Do you agree with this? In order to make this class interactive, I'll give you time in order to respond. How many of you believe that in order to make organization doing well, in order to attain the corporate objective, we need to manage our performance, and in order to manage our performance, we need to assess our performance? How many of you believe that we need to assess our performance in order to manage our performance? I believe that everyone is willing to or agree with me on this. Now, friend, if we need to assess the performance, obviously prior to that, we need to measure the performance. And in order to measure the performance, we must have certain tool through which we can measure the performance. I'll say my word once again. Every organization willing to attain the corporate objective, it is established. For that, it prepares the strategy. So organization is thriving for attaining the strategy which is established. And to attain the strategy, it have to run through a particular performance path. If the current performance is not satisfactory or not as per the expectation, it need to improve the performance. So there must be a performance management system which help to improve my performance. But prior to improving my performance, I need to assess the performance. And for assessing the performance, I need to measure the performance. Because I need to measure the performance, obviously for that, what I need to have? I need to have certain measurement tool. Those measurement tools can be financial, can be non-financial. Financial measurement tools are like ROI, RI. RI means residual income, EVA, economic value added. And non-financial tools include the balance scorecard, the performance pyramid, performance prism, building block, and then the triple bottom line. Agreed? So chapter number 8 is all about studying the different tools used to measure and evaluate the performance for both the organization which is working for profit, doing the economic activity, and also the organization which is not working for profit. For them, we have a model called value for money. And in value for money, we ensure 3 things. What are the 3 things? The economy, the effectiveness, and the efficiency. Agreed? So this is all about the chapter number 8, which we are going to study. Move further. The note number 1, friends. Note number 1, talk about the performance management system. If you see performance management system, it can be understood as a solution, or it can be seen as a solution available to the organization to improve its performance, to move towards the sustainability. Please mind it, friends. It is not only important to be profitable. Apart from being profitable, you need to be sustainable. What makes sustainability different from profitability? Sustainability includes continuous growth and survival also, apart from being profitable. Agreed? So performance management system helps an organization to be sustainable. So it can be seen as a solution which make the organization sustainable. Performance management system contain the 4 stages. What are those 4 stages? The first stage, determine the organization structure. Friend, we need to identify whether our organization is a line organization or a functional organization. If our organization is a functional organization, then obviously it will be divided among the different functions. Then we have to establish the performance measurement tool according to the functions. But if the organization is divisional in the nature, we need to fix the responsibility for each of the divisional manager. We need to assign the task to the divisional manager. Okay, for division A, the ROI shall be 18%. For division B, the ROI shall be 20%, and so on. So in order to establish the performance management system, in order to implement the performance management system, it is very important to understand what organization structure the organization is following. Agreed? Number 2, apart from identifying the organization structure, you also need to see the degree of delegation of the control. Firstly, we'll understand what is the delegation of the control. The investor appoints the board of directors to run the company. Board of directors themselves don't run the company. They only prepare the strategy. To run the company, they appoint the executives. The executive who run the company must be equipped with certain authority. It means they must have certain powers. It means the power is delegated by board of directors, by the CEO to the executives. We need to see the degree of the delegation. What does it mean? Whether the division 1, which is working under the CEO, and the division 2 working under the CEO, they are fully having their autonomy or not? Are they bound by the decision of CEO or taking their decision themselves? If they are taking their decision themselves, obviously performance management need to be applied at the divisional level. The performance need to be measured at the divisional level. But if all the decisions are taken by the CEO, not by the divisional manager, then the performances need to be measured at the CEO level. Hence, in order to identify that what are the responsibility center are available in the organization, are there in the organization, we need to see the degree of the delegation. If the division, please understand this point once again, because it is important enough. If the division is responsible for its profit and the losses, for the asset it maintains, it means it's a separate responsibility center. But if the division is fully controlled by CEO, it means it cannot be seen as a separate responsibility center. Hence, the performance target shall not be fixed for the divisional manager. Performance target shall be fixed only for the CEO. Moving further, the third stage, after identifying the organization structure, after identifying the responsibility center, what next is there? Establish the performance measure. Performance measure can be financial, can be non-financial, as already discussed. And for each division, you may establish the target. Okay, ROI shall be 15% or 18% or 20%, and so on. Agreed? Now we identify the structure. Now we establish the responsibility center. We establish the performance measure. Now next, what we need to do? We need to appraise the performance. We need to measure the performance against the indicator we established. So here we actually calculate the performance of the organization. Agreed? Now, friends, we are moving to the note number 2. Very important. This note number 2 is given on the page number 8.3 of your study material. But apart from that, few addition I made to this, which is, you can say, will be there in your study material as well. So you need to pay little bit attention on this. What is the organization structure? First, organization structure is a structure through which organization is divisioned or divided. Basically, organization structure outline the role and responsibility of the individual who are working in the organization. Not only the role and responsibility, apart from that, their authority as well, and how they interact with each other in order to obtain the organization objective. It means organization structure tell me whether there are different divisions or not. Organization structure tell me whether the organization is having a functional system or not. Agreed? Organization structure, friends, can be of a four type. The first organization structure can be entrepreneurial in the nature. In the entrepreneurial organization, because these things you already studied somewhere during your graduation or at some lower point, and so I'm not giving much time to this, but we need to study this in order to reach to the position where we will start solving the question. Okay. The first type of the organization structure is the entrepreneur. Entrepreneurial organizations are those where there is no distinction between the management and the owner. Owner himself is the manager of the business. He himself controls the managing activity of the business. Obviously, when a firm is a small, just started the business, it don't have a large volume of the business, then the owner may possibly himself is managing all the affairs of the business. So this type of organization structure is suitable to the new and the small organizations. Apart from this, this is also suitable to the service entity. Take an example of a chartered accountant firm, which is just a new or at a beginning stage. The chartered accountant himself performed the task. He himself is the owner of the firm. He himself took the managerial decision of the firm. Take another example of a barber shop. The barber himself is the owner and himself take the managerial decision. So in the service entity and in the trading or manufacturing entity, which are of very small size or in the initial days, the entrepreneurial structure is valid. This is not in your study material. This will be addition to the study material. Okay. Now moving further, 2.2, the functional organization structure. In case of functional organization structure, friends, the organization is divided among the different functions, such as production, such as purchase, such as marketing, such as finance. Since here the functions are acting independently from each other, so there may be one problem in the functional organization. What is that problem? The conflict of interest. Take an example along with me in order to understand this thing. The finance manager don't willing to incur the amount on the new project because he feel if he incur the amount, the capital employed will enhances or increase and the ROI may reduce, because in the initial years, project may not give the good amount of cash flow, hence profitability may go down. So his salary, if linked with the performance measure of ROI, may get reduced. So despite the request from the project manager, despite the request from the production manager who is seeking the new machine, the finance manager may not allow him to incur the extra budget. So in the functional organization, there is a conflict of interest. If we wish to avoid the conflict of interest, obviously the functional organization structure is not for us. Moving further, divisional organization. Take an example, a company dealing into the three products, the product 1, the product 2, and product 3. And the nature of the product are not very much similar to each other. So company may possibly consider the production of each product as a separate affair and may designate it as different division. Mind it, friends, division will not only be based upon the different product. Division may be based upon the different geographical regions. It may possible the company have the separate Asia affairs or the operation and the separate African operation. Agreed? One more thing here. If the division is capable to work independently, it may be said strategic business unit, SBU. Agreed? Now one more thing. Despite the organization is divided among the different divisions, division 1, division 2, division 3, there may be some shared function or some common function, like the HR. The various person need to be appointed in division 1, also appointed by the corporate HR, in division 2, also appointed by corporate HR, in division 3, also appointed by corporate HR. These sort of the function are known as shared function or corporate function. I believe it is quite clear to you. In the divisional organization, there is one advantage. What is the advantage? Since the division may have their own autonomy, hence they are free to take decision. So speedy decision can be seen. But there is a problem as well. The manager of division 1 will be concerned to the performance of division 1 only. He is not concerned with the overall performance of the company. So lack of goal cognizance or sub-optimization may be seen. This we'll understand in the further topics to come. Agreed? So I believe that you understand the pros and cons of the divisional organization structure. Moving further, matrix organization structure. This is also new for you. In the matrix organization structure, the feature of both divisional and functional are present. But instead of having the division, what we have the different project manager. The project manager of project A, the project manager of project B, the project manager of project C. The project manager don't have their staff. Instead of having the permanent staff, they go to the functional head and ask for some person on the deputation or some person on the allocation basis. Like project A deals with the implementation of cost control technique in the company. So it need one person from the manufacturing team, one person from the sales team, one person from the finance team. So it will go to the head of the finance, the VP of manufacturing and the VP of the sales, who will allocate the one person from their team to this project manager. And the project manager will start working with the help of them. It means in the matrix organization, there is a cross functionality, because in the project A, there is one person from the finance and there is one person from the sales. So here the expertise of different domain can be enjoyed by the project manager of the project A. But there is a problem associated with matrix organization as well. What is that problem? Friend, if you see the staff which are shaded here, they are belong to which function? This staff, which is I'm circling right now. He is belonging to the finance function. So he will have to report to the VP finance. But he is working on the project A. So he also need to report to the project manager of project A. So there is a conflict of interest. He will have to satisfy the ego of two bosses. But there is an advantage as well. What is the advantage? Specialization is available to the project A and the speedy decision. Why speedy decision? Because they are having the representation of each of the function. Later on, functional expert can't say, project manager of project A, you took the decision, but you didn't ask from us. What he will say, your representative is present in our team. He can make the point if he wish to. So matrix organization have its own pros and cons. And in the matrix organization, there is a cross-functional team. Agreed? Now, friend, quickly revise the note number 1 and 2 along with me. So those my friend who joined the meeting later on, they must know what we are doing and how we are progressing. And then we'll move to the note number 3. Now quickly revise along with me. Performance management system is what? It is a system which can be seen as a solution which will ensure sustainability to the organization. 3 things हैं. कौन-कौन सी 3 चीजें हैं? It can be seen as a solution. Number 2, which will ensure the sustainability of organization. And number 3, It can be seen as a solution system. System means इसके कुछ steps होंगे, इसके कुछ stages होंगी. Again, I am mentioning performance management system is a staged solution which will help the organization to attain the sustainability. Now revise the 4 stages along with me. What is the first stage of the performance management system? We need to identify or determine the organization structure. Whether my organization structure is divisional or functional or matrix or entrepreneur. Agreed? यहाँ पे मैंने ब्रैकेट में मेंशन भी किया that we need to refer the note number 2. We already refer the note number 2. Hence, I hope you understand the various form of organization structure. While we appraise the organization structure, we also need to ensure one thing. What is that thing? Whether the structure is appropriate for me or not. Now you will ask, sir, what is the importance of this line? Please understand along with me. There are 2 ways of growth. What are 2 ways of growth? The first way of growth is organic growth, and the other way of growth is unorganic growth. I hope you are already aware of this thing. You might study this thing in SFM too. In the organic growth, we try to do what? Product development. Launch the new product. If the Maggi is selling the Maggi, they must launch new Maggi, Atta Maggi, Fiber Maggi, any form of Maggi. Agreed? Or do the market development. It means basically what you try to do, you try to sell more number of unit or more product of your company. This is organic way of getting the growth. But what is the unorganic way of getting the growth? Doing merger and acquisition. Friend, if you are doing merger and acquisition, then which form of organization structure is suitable to you? Divisional form of organization structure is suitable to you. Because whenever you acquire a new firm, you will name it some XYZ division and bolt it to the entire organization. The merger the integration become easy if you are in divisional structure, because the organization which you just acquired, the target organization which you just acquired, you can consider it as a separate division. You need not to make it a full-fledged part of your existing organization. You can consider it as a separate division with a full autonomy. Likewise, the Sun Pharma is doing with the Ranbaxy. Still, the employee of Ranbaxy is not on a payroll of the Sun Pharma. Because it's always easy that if you are getting a new firm, rather than, you can say that facing the cultural conflicts, rather than facing the issue, because obviously the ego of already the managers of the organization which you acquired will be hurt if you ask them to work under or as subordinate to the manager of your organization. So in order to avoid all such things, you will consider it as a separate division and start working on that. No doubt you will implement your strategy to control that division as well. So you must see that organization structure must be suitable to attain the organization strategy so that the performance of overall organization can be enhanced. Agreed? So friend, पहला फेज क्या है परफॉर्मेंस मैनेजमेंट सिस्टम का? ऑर्गेनाइजेशन स्ट्रक्चर को डिटरमिन करो और देखो वो सही हो. द सेकंड थिंग, सी द डिग्री ऑफ डेलीगेशन. Okay, you have a division, but you don't delegate any power to them. Are they able to work as an individual component, as an independent component? No, they are not. Hence, you need not to measure their performance, because if the person is not able to take the decision, how you make him responsible, how you make him accountable. Hence, the responsibility accounting is not for the organization where there is a no delegation. Where there is a delegation in the organization of the power, only there the use of the responsibility accounting is possible. Agreed? तो दूसरा फेज क्या है, ये चेक करो डिग्री क्या है डेलीगेशन की. डेलीगेशन तो होगी, लेकिन डेलीगेशन क्या फुल डेलीगेशन है, पार्ट डेलीगेशन है. How much the power you assign to the subordinate, this is need to be checked. Agreed? So that we can identify the responsibility center. Take an example along with me. If you have a manager who is responsible in the automobile company to paint the cars, you can say that the manager is managing the paint store, and it can be seen as a cost responsibility center. Agreed or not? It is very important in order to identify the responsibility center to, you can say that, see the degree of delegation. Now, what is the third stage? The third stage is to identify the measure. is to identify the indicator against which the performance will be measured, against which the performance will be evaluated. यहाँ पे KPI determine करने हैं, in short कहूँ तो. Further, review the performance. Obviously, by establishing the KPI will nothing happen. You must have a dashboard on which you keep noting the performance and comparing the performance against the indicator. How much ROI actually the division earn, whether the ROI is above the overall ROI required for the company or not. Agreed? So jaldi se revise kariye. What are the 4 stages of the performance management system? See the organization structure. Make sure it must be best fit. See the degree of delegation in order to identify the responsibility center. Establish the performance measure for each of responsibility center and review the performance, appraise the performance. Agreed? Now moving further. What are the 4 organization structures? Entrepreneurial, functional organizations, then divisional organization, last but not the least, the matrix organization. I believe, friend, this thing is quite clear to you. Now we are moving to the note number 3. Note number 3 जो आपका है, that is given on the page number 8.2 of the study material. Responsibility accounting. But prior to go into responsibility accounting, let me tell you a small story. You find it very easy to digest. Okay. The shareholder or the owner. If the company is there or business is in the form of corporate, don't run the business themselves. Usually they appoint the board of directors. But if the organization is small, it may be possible in the case of entrepreneurial organization, the owner himself managing the business. But let's take the case where there is a corporate where the power is given by owner to the director to take the business decision. Okay, now we appoint the director. Whether the director themselves take the decision? Yes, they themselves take the decision. They conduct the board meeting and took the decision. Whether they themselves execute the decision? No. For execution, they have the staff. So director who is agent of shareholder further appoint the executive to execute the strategy which he formulate. So now here the executive who is responsible for executing the task which is assigned to him by the director, he must have certain authority, he must certain control. So he asked to director, sir, give me some responsibility to direct the lower staff, give me some budget so that I can buy some equipment in order to perform the processes. So budget is allocated to that person, authority is allocated to that person. Now in order to see the executive who is equipped with the authority shall not abuse his authority, we also fix responsibility upon him. And you already listen this thing, may agree to this thing, that where there is a authority, there is accountability. So we fix the accountability, we fix the responsibility to that particular manager. Now take another example in order to support the original example. There is organization which is having the 3 divisions, division 1, division 2 and division 3. Now division 1 is assigned with a particular task and with the objective that your ROI must be 10%. And similar way, division 2 assigned with the task and with the target, your ROI must be 12%. And division 3 also assigned with task and with the task that your ROI will be 10%. So that overall organization ROI will be, let's say, 11% or something else, whatsoever be the percentage. We are hereby not concerned with the percentage. We need to understand the concept only. Can later on the manager of division 1 held responsible for overall performance of organization? Can he be held responsible for overall performance? Answer is no. He can only be held responsible for the performance of his division. So what we said, that the director assigned the task to the executive. For performing those tasks, executive seeks some authority in order to ensure that authority should not be abused. The executives are assigned with the responsibility as well. And what sort of responsibility? That okay, if we give you this much of the budget, then you need to earn this much of the ROI on the invested amount. Now, the division manager is only responsible for the budget allocated to him. Only responsible for the division allocated to him. Is not responsible for the overall organization. Agreed? So, responsibility accounting is a system where the person had responsible for the things or the items which is under his control. Agreed? Now quickly read the definition along with me. This definition is given by the Dakin and the Mahar. But you need not to remember the name of the person who gave the definition. You just need to refer it with me or read it with me along with me once. Responsibility accounting is collecting, summarizing, and reporting of information, wherein individual manager is held responsible for either of cost, profit, revenue, or investment center. Means person is responsible only for one responsibility center, not for entire organization. And which responsibility center? Which is under his control. So responsibility accounting is accounting which believe that performance of a person will be judged only based upon those factors which is influenced by him. The factor which he can't influence shall not be considered while evaluating his performance. Agreed? Moving further. The idea behind responsibility accounting is that the performance of each manager should be judged based upon only the item under his control. That is what we already discussed. Friend, we discussed one more thing earlier as well. Responsibility accounting is apt or fit case for only those organizations where the top management delegated some of the decision-making power. Where the top authority don't delegate any of the decision-making power, there is no space of responsibility accounting or no utility of responsibility accounting. Because why you are measuring the performance of divisional manager 1 or divisional manager 2 if they are not allocated with any budget or the budget is managed by the CEO himself, then only measure the performance of CEO now because he is taking the decision. These persons are not taking the decision. Agreed? But obviously, if you are implementing the responsibility accounting, then the clear and defined delegation of authority, the division of the task must be there so that the person must be accurately held responsible for the things controlled by him. And shared responsibility should not be there. Why? Because shared responsibility is no one's responsibility. And so you must tag the responsibility to some individual manager. This is only the reason when you are in employment, the KRA assigned to you the key responsibility area, because you are responsible for those areas and the performance of organization in those areas. Okay, I believe the note number 3 is quite clear to you. Now we are moving to note number 4, which is given on the page number 8.4 of your study material. What is the responsibility center? Responsibility center is nothing but a part of a larger organization which is specifically or significantly dealing with a particular set of action, which may include incurring the cost or recognizing the revenue, or both incurring the cost and recognizing the revenue, or managing the asset. मैं अपनी बात एक बार दोबारा कहता हूं. Responsibility center एक organization का हिस्सा है, which is either responsible for spending money, spending cost, or earning revenue, or doing both. Spending cost, earning revenue means profit center, or managing the asset means investment center. Agreed? So responsibility center can be of a 4 type. What are the 4 type of responsibility center? But prior to that, you must see the definition as well. Responsibility center is nothing but the specific unit of the organization assigned to the manager who is held responsible for the operation and resources. The responsibility center can be categorized into the cost, profit, revenue, and investment center. Now quickly see these four categories of the responsibility center. The first one, 4.1, cost center. Up till now, you many a time understand or refer this definition that cost center is a center which is responsible for incurring the cost. At the final level, I have to do only one improvement in this. And what is that improvement? You will not use word only cost. You must say those costs which are recurring in the nature or revenue in the nature. Agreed? Cost center is that responsibility center which has the control or responsible for incurring the cost. But what sort of cost? Which are recurring nature cost. The cost which is of the capital nature, they will be dealt by investment center. They will not be dealt by the cost center. Agreed? This is addition to the current study material as well. Okay. Further, example of a cost center, the paint department of automobile firm. Because the paint division of an automobile firm is responsible for painting the car on which they are incurring the cost. They are not concerned with the revenue. They are not concerned with the, you can say that, amount of the profit company is going to generate it. They are only concerned with which thing? How much budget is allocated to them in order to paint the car. And they should not overshoot this budget. They must complete the task of painting within the budgeted allocation. Agreed? So cost center is largely concerned with implementation of cost control and cost reduction techniques. Because unke upar responsibility kya hai? They should not overshoot the cost. Hence, in order to ensure that they are not overshooting the cost, what they will do? They will either use the budget or standard costing, means cost control, or they will use the technique like JIT, if it is inventory management. They will use technique like the, you can say, target costing, the design team who is designing the product, which will be constituted as cost reduction. Agreed? Moving further. Second responsibility center, revenue center. As the name suggests, the revenue center is those responsibility center which have the control over the generation of revenue from the operation or responsible for the revenue generated for the operation. Okay, we'll take an example of this. Take an example of a booking counter of airline company. What basically the booking counter of airline company will do? They'll book the seat in an aircraft. It means they are only receiving the money in form of revenue. They are not concerned with incurring the cost. Who is responsible for incurring the cost? Obviously, the logistics staff, the ground staff, the crew member, they can be seen as a cost center. The pilot himself can be seen as a cost center. But the booking counter will be seen as the revenue center. Take another example. The booking counter of some cinema. What they are doing? They are selling the tickets. So their target is what? Sell the maximum number of tickets. And there is one problem with the service entity. There is no concept of inventory. Hence, there is only target to sell maximum number of the ticket. Because if once the plane flew with few empty seats, once the film starts with few empty seats, later on, those seats which remain empty cannot be stored as a closing inventory. Obviously, those were wasted. Agreed? So, in the service entities, you easily find the revenue center, which is responsible for enhancing the revenue by selling the maximum number of units possible to the optimum capacity level. अगर आपके plane में capacity 450 seats की है या 260 seats की है या 170 seats की है, you must try to or you must attempt to sell entire 170 seats or tickets. Agreed? So in the manufacturing entity, you usually find cost center and the profit center and investment center. In the service organization, you also find the revenue center. Okay, moving further. Even though in a manufacturing organization, revenue center will be there. Further, the profit center. Profit center are the responsibility center where the manager of the center or division has the control over both the revenue and the cost. But those costs and those revenue which are apart from the capital nature. Again, this point need to be kept in mind because the capital nature item will be dealt by the investment center. What is the best example of the profit center? The canteen. The canteen in the school, the college, or the hospital. Because the canteen owner or the organization, if they themselves are managing the canteen, are the profit center. Why? Because they are incurring the cost on the vegetable, on the masalas, with the help of which they prepare the dishes. And they are also looking after the revenue they are generating by selling those dishes. Hence, the best example of the profit center is the facility of canteen, working in any of a school, college, or any other organization, even though in a manufacturing concern too. Agreed? Now the next one, the investment center. Investment center is a center which is responsible for not just the revenue and the cost relating to the center, but also the asset that result into these costs and the revenue. Okay, the cost of purchase of asset, then the cost of operation of the asset, then the disposal of the asset, and generating the return by use of the asset. Agreed? Friend, now one very, very important thing. If any investment center capable to work independently from the rest of organization, it can be said SBU, Strategic Business Unit. Agreed? So, it is not always necessary that each division is SBU. Each division may not be SBU. For being SBU, what is essential? The capability of working independently in isolation is essential. And there is practical insight for you. ITC is dealing in the 13 business categories. The 7 business, which includes the cigarette, food, personal care, education, lifestyle, retail, lifestyle retail, then safety matches and agarbattis. Apart from these 7 businesses, number 8, hotel, number 9, paperboard, number 10, packaging, number 11, agribusiness, number 12, information technology, number 13, IC brand world. So they are dealing in 13 business and they are having 11 divisions, but only 4 are designated SBUs. So all the division cannot be said SBU. To say any division or to classify any division as SBU, what is need to be seen? That division must be capable to work independently. Division is considered as purely individual, separate, isolated unit. It means the division must have its own objective. The division performance shall be measured separately from the organization's overall performance, so that division shall be controlled or the performance of division shall be controlled. So I strongly believe that the note number 4 is also clear to you. Now we'll start the real chapter 8 here. Okay. The divisional performance measures. Friend, in order to understand the divisional performance measure, let me tell you a small story through which you will be able to understand that why divisional performance measures. Friend, we discussed this thing that whensoever we implement the performance management system or execute the performance management system, we need to see the organization structure. Organization structure can be entrepreneurial, can be functional, can be divisional. So if the organization is divisionalized, because Usually when organization grow, due to the dynamic of the business environment in which it is working, divisional structure is usually considered as a better structure. Agreed? Hence, usually we found the organization with the divisional organization structure. So if the organization is divisionalized, then the performance also need to be measured at the divisional level. Because if we give the power to the manager of division 1 or manager of division 2 or manager of division 3, obviously in order to assess their performance, we need to measure the performance of division 1, division 2. In order to measure the performance of each division, we must have the performance measures or indicator which is pertaining to specific division or which are specific to the division. Agreed? So you need not to be confused with the word. So here the word is divisional is written. It means these performance measure will be applicable only to the division. No, these performance measure are universal. But we usually found that the organization is largely either divisional in the nature or the organization structure, hence the divisional performance measure word is used. Instead of that, you may use the word segment performance measure in order to measure the performance of each of the segment. Okay? And you even though can correlate it with the segments which you studied in the financial reporting. Okay? Now moving further. These divisional performance measures are given on the page number 8.5 of your study material, but there are few small additions in this, which you will find in the upcoming edition of study material. Okay, now let's read this line along with me. The performance measurement system play a key role in developing and deploying the strategy, but it has a prerequisite, and that is measure the existing performance. It means if you want to build, if you want to formulate the new strategy which will help you to improve your performance, what you need to do first? You first need to measure your existing performance. And in order to measure the existing performance, obviously you need to have performance measure. And what are the performance measure available to us? We have two sort of the performance measures. The first sort of performance measure, which are the financial measure, which largely deals with the profitability. And then we have non-financial performance measures. Friend, mind it. The word non-financial is written, but it does not mean it ignore the finance. It also consider the finance, but it consider the finance as a part of the larger picture. It is not only considering non-finance element. It also consider the finance. Like in the balance scorecard, there are the 4 perspective, and one perspective out of these 4 is a financial perspective. So these 5 tools also consider the financial perspective. But apart from financial, they also consider many other perspectives too, like the stakeholders perspective, like the customers perspective, like the employees perspective. Agreed? So they are not only considering the shareholder, they are also considering diverse stakeholder. Hence, one can say this is the pure finance measure and these are other than finance measures. Agreed? And this thing is mentioned here for your reference as well, that the tool mentioned under the non-finance measure category also include the financial indicator or the perspective to a certain extent. Agreed? Okay, friends. Now moving further, there is another question arises. If we have a financial measure like ROI, RI, EVA, then why we need to have the non-financial measure? I need the answer of this question from you. Those who are online, please give me the answer of this particular question. If we have the financial measure, are they not sufficient that we need the non-financial measures? Okay, I'll give you a minute. You need to answer me that why we need to have non-financial measure in addition to the financial measures. Quickly. Those, my friend, who are online, please answer me this particular question, that why we need to have non-financial measures. Good. Okay, let the other person answer as well. Okay, one answer is there that we need to consider the sustainability. Fine. Friend, you need to notice this fact that financial measures are largely related to the profitability of the organization. But we are not only concerned with the profit. We need to ensure growth. We need to ensure survival. Hence, we are concerned with larger picture, which is known as sustainability. Agreed? Because we are concerned with the sustainability, hence we need to consider the factor apart from the profit. And these are the tools which consider the factor apart from profit as well. I hope this thing is clear to you. Now moving further. The feature of good performance measure. The three features which must be there, only then a performance measure will be said good or standard performance measure. What are those features? First one, provide the reasonable incentive to the divisional managers. Please mind it. The performance measurement system is not only to improve the organization performance. There is another objective to have a performance management system. And what is that objective? We want to incentivize, we want to give the incentives or performance related pay to the divisional manager. So a good performance measure must be capable, so that reasonable incentive must be provided to the divisional manager so that he must remain motivated and take the decision in the best interest of the company. Further, it must include only those factors which are under the control of divisional manager. Agreed? We already said that responsibility counting is based upon the belief that the manager shall be held responsible for those items only which is under his control. The third and the last one, recognize the long-term objective as well as the short-term objective. So our measure shall not be based upon the short-term objective. Likewise, anyone who is a divisional manager willing to, yes, Chavi answer from Haryana, track the strength and weakness. Yes, absolutely fine. Good. So recognize the long-term objective as well, the short-term objective of the organization. Please mind it, a good performance measure is that which also try to include the long-term objective of the organization apart from the short-term objectives. Obviously, the division manager need to earn the good profit. And if we consider ROI as a measure, what the divisional manager will do, he will try to defer the investment so that his capital employed or investment shall be low. So ROI can be depicted higher than what it should be so that he'll get the more performance related pay. So your performance measure shall be in such a nature, it will be said good only if it forces the divisional manager to look the long-term picture rather than only the short-term picture. Okay. Now moving further, friends, I believe that there is a theory in a good quantum. So we must skip this particular topic. We'll do this topic of pros and cons of the performance measure when we cover all the performance measure. So I'm not skipping it. I'm just deferring it so that we can start some practical question, because I feel that my friends are more concerned or willing to solve the practical question. So I take you the practical issue so that we can start solving the numerical question. So I'm just deferring it, and deferring it to when? The moment we complete all the 8 performance measure, then we'll come back to understand what are the pros and the cons of the performance measure. And it's also making sense to study the pros and cons after reading the performance measure, so that we can understand things in a very well manner. And please mind it, this is important because the problems written here are some technical words like the tunnel vision, sub-optimization, myopia is there, obsession is there. I believe that we must spend some time on this in order to study these together. Okay. Now we are moving ahead. We are moving to the note number 8. So friends, please pull out your calculator now, because you are going to do the calculation along with me. I'm not going to do the calculation entirely at my cell phone. I'll be taking your help, and I believe that in order to make the class interactive, I must seek the calculations from you. You will make all the calculation. You will try to furnish the opinion. No doubt, I'll let you that how we need to move further. I tell you the important point. We'll discuss what is important to learn. I drive the class, but calculation shall be done by you. Okay? Done. Fine. So all those who are online, please be attentive and keep on sending the you can say the responses in the query link box, so that you must able to get the concept in a very well manner. Okay. Note number 8, which deals with what? Which deals with the financial performance measure. What it says, in order to be sustainable, it is also important to be profitable, survival, and the growth. Since the financial performance measure or the indicator can be considered the best indicator of the profitability, hence the financial indicator must be part of your performance metrics. So in the note number 8, we recognize the need that ROI, RI, and EVA shall be part of the performance metrics. Agreed? Now we need to study these one by one. What are the limitation of ROI? What are the limitation of RI? Why we need to move to the EVA? Agreed? Now start the ROI. I need the answer from you. So respond quickly to each of the query now, or to each of the point now. Friend, if I say that there are two divisions, division 1 and division 2. The division 1 earns the profit of 2 lakh rupee, and division 2 earns the profit of 1.4 lakh rupee. And these profits are controllable by the division. What does it mean, controllable by the division? It means these profits are calculated after considering the revenue of division and the cost of division. We are not considering the allocation or absorption cost of the head office. We are only considering the divisional revenue and divisional cost in order to compute controllable divisional profit. So the controllable divisional profit of division 1 is 2 lakh rupee, and controllable divisional profit of division 2 is 1.4 lakh rupees. You need to tell me which division is better. I'm waiting for your answer. You need to tell me which division is better, whether the division 1 or division 2. Quickly answer this particular query. Which division is better, division 1 or division 2? Those who are online, please quickly send your response. There are two divisions, division 1 and division 2. Division 1 earns the profit of or a contribution of 2 lakh rupees, whereas division 2 earns the contribution or the profit of 1.4 lakh rupees. Which division is better according to you? Brilliant answer, good. Okay, I'm refreshing the screen as well. Okay, tell me, which division is better? Something division 1, something division 2. Okay, some are knowing the catch as well. So they are telling that see the investment. Good, good. Okay, friend, from this particular fact itself only, you will say that division 1 is preferable or division 1 is good. But if I tell you that in order to earn this 2 lakh rupee, the division 2 invested the capital of 20 lakh rupee, it means its return is only 10%. Whereas division 2 invested only 10 lakh rupee and its return is 14%. Now your answer may differ. Preeti answer division 1 since the return is 10 lakh. No, friend, you need not to see table right now. You need not to see table right now. You only need to answer based upon the fact written here. Among the D1 and D2, which one is better? I praise you that if you consider the further things as well, but I only ask based upon this fact. We are not right now considering the table. We are trying to see that why the formula of ROI is structured in this manner. Okay. Okay, come back. Friend, again, I am saying my words. If someone only give you the data that the division 1 profit is 2 lakh rupee and division 2 profit is 1.4 lakh rupee and ask you which division is better, you may answer division 1. But this answer may be misleading. Why? Because you need to consider the amount of investment along with the amount of profit in order to give a real advice, a sensible advice. This is the thing suggested by the DuPont. What the DuPont said, DuPont is the same organization which gives the DuPont analysis formula as well. The DuPont suggests during 1920 that we need to consider the level of investment along with the income generated through such investment while appraising the performance of investment center. It means formula for ROI shall be what? It shall be controllable profit divided by investment. Instead of investment, you may write capital employed. And here you can take average capital employed or average investment, or you can take closing as well. Although largely in academics, we took the average. Agreed? Moving further, you may ask me a question, sir, why you mentioned this controllable profit? Because we are doing what? We are doing the responsibility counting. We are studying this topic under the responsibility counting, and responsibility counting says that person must be held accountable only for the thing which is controllable by him. So we must consider the controllable profit. Agreed? Now moving further along with me. So ROI is what? ROI is nothing but simply the measure of return as a rate on the asset invested. This is the formula that we apply here, that you need to see the profit divided by the investment into the 100 in order to compute it in the percentage. But there is one problem with the ROI. What is that problem? That it evaluating the divisional manager based upon the ROI. If you are evaluating the divisional manager based upon the ROI, it may lead to the sub-optimization, the lack of goal cognizance. Now, what is the sub-optimization? In order to see, now consider the table along with me. Preeti, now you need to consider the table. There is an proposed investment, and the investment is of how much? 20 lakh. So there are two divisions, division alpha, division beta, and both need to invest. The amount of investment is 20 lakh. By investing 20 lakh, the division A is capable to earn 2 lakh rupee. But whereas the division B is only capable to earn 1.4 lakh rupee. Can you tell me what is ROI? Quickly, my friends, those who are online, what is ROI? ROI of division A is 10%, whereas ROI of division B is 7%. How I computed this 7 and 10%? It is controllable contribution or profit divided by amount of investment into 100. Agreed? I strongly believe that it is clear to you. The present ROI of division is also given to you. It is the 13% and the 5%. Now the question in front of you is what? Whether the manager of division alpha willing to invest in this project, whether the manager of division beta willing to, shall we answer 10% and 7%? Absolutely fine, Raj. Bilkul sahi. Whether the manager of division B willing to invest in the investment or in the project. Friend, if you consider the perspective of manager of division alpha, what he will say? My existing ROI is 13%. If I go for the new investment, I will earn only 10%. My divisional ROI will decline, due to which my performance will be considered as low performance or declined performance. Hence, my performance related pay may be get hampered. So he will not be willing to invest in this new project. Agreed? But in comparison to this, if we consider the manager of division beta, what he will think? My current ROI is only 5%. If I invest in the new project, my ROI from new project is 7%. Hence, my overall divisional ROI will increase. My performance will improve. I must invest. Up till here, it is fine. But if I tell you the overall cost of capital, WACC or KO is 8%, it means division alpha, who is generating the return from the project of the 10%, is earning more than the company required rate or the hurdle rate. But whereas the division B, which is only earning the 7%, which is less than the company's required rate or the hurdle rate, still the manager of the division beta willing to accept the project because his individual division performance is improved despite the company is bearing the loss of 1% here. And the manager of division alpha not willing to pursue the project despite the fact he can help the company to earn the 2% on the invested amount. But why he is not doing so? Because he is concerned with his divisional ROI. So it means there is a problem with the ROI. And what is that problem? That the divisional manager, if their performance is linked with the divisional ROI, start taking the decision based upon the divisional ROI rather than the overall company's perspective. If I consider the overall company perspective, then division alpha must go for project and division beta must not go for project. But they are not considering the company's overall objective. They are not seeing company as an overall picture of the company. They are considering only their individual division. Because they are considering only their individual division, hence the division alpha manager is not willing to go for the project, but whereas the beta is willing to go for the project because the project gave him the 7% instead of his existing rate of the 5%. I hope it is clear to you. Quickly write down. It is clear to you that what is the limitation of ROI? ROI leads to सब ऑप्टिमाइजेशन, डिविजनल मैनेजर कंपनी के बारे में ना सोच के अपने डिवीजन के बारे में सोचते हैं. So there is not goal cognizance. Goal cognizance means ignoring the overall goal, looking your individual narrow goal. Okay, quickly write down. Is it clear? Can we move further quickly? Although the answer is correct, which is mentioned by the Chavi and the Preeti as well. Okay, chaliye ji. Now further, no doubt the ROI is easy to calculate as all the requisite amount is readily available, or all the informations are readily available if the accounts are prepared at divisional level. But it has a poor relation to company's overall profit, hence may not have a good relation with the shareholder, even though the research also shows that despite company having the good ROI, the shareholder wealth not increase, hence ROI shall not be considered as one of the best performance measure. Okay, now moving to the next performance measure, which is the residual income. So in order to overcome the dysfunctional or the limitation caused by the ROI, what is the dysfunction or the limitation of ROI? Sub-optimization or the lack of goal cognizance. The residual income approach can be used for the purpose of evaluating the performance of divisional manager. Agreed? So RI say, the residual income says that it will try to overcome the problem caused by ROI. Now, question arises, what is RI basically? Residual income hai kya? RI is the excess of controllable contribution. You can see this thing again and again. We are using the word controllable profit or controllable contribution. Okay. Over the predetermined organization-wide minimum hurdle rate on the investment controlled by divisional manager. How we can write it in a simple manner? You need to see the profit earned by division and then reduce this profit with the amount of required return. How we compute the required return? Now this question arises. Required return can be computed by multiplying the cost of capital or WACC with investment of the division. So in this manner, we can compute the RI. I hope it is clear to you. Agreed? Moving further. Now, friends, the same fact we'll see, but from the perspective of RI rather than the ROI. What was the investment amount? The investment amount was 20 lakh and 20 lakh in both the cases. What was the expected contribution? The expected contribution to the division alpha is 2 lakh, whereas to the division beta it is 1.4 lakh. And what was the overall cost of capital of company? 8%. If the overall cost of capital of the company is 8%, then it means on the 20 lakh rupee of new investment, division alpha's manager must earn bare minimally 1.6 lakh rupee. And division B manager must also earn 1.6 lakh rupee. How much actually the division alpha's manager able to earn, or division alpha able to earn? 2 lakh rupee. So hence residual income is positive 0.4 lakh. Here the residual income is negative 0.2 lakh or 20,000 rupee. Hence it is quite clear, since the residual income is negative in case of division B, hence division B must not opt for the project. but it is positive in the case of division alpha. Hence, division alpha must go for the project. I hope this thing is quite clear to you. One more thing here. Higher the residual income is better. This is the decision rule. How will take the decision? We see here that in which case the RI is higher. We find that RI is higher in the case of the division alpha. Hence, we move or said that the manager of division alpha must opt for the investment or for the project, but whereas the division B or the beta should not go for the project. But there is one problem with the RI as well. RI is an absolute measure. Now, friend, here you need to learn one thing. There are two sort of measure. One is relative measure, which is usually measured in percentage like the ROI. Another one is absolute measure, which is measured in the amount like the RI. There is problem with every absolute measure. And what is that problem? The problem of the size. Obviously, if there are two division and one is large division, LD stand for large division and SP stand for small division. In the small division, the investment is less in comparison to the large division. So obviously return will also be less. Hence the RI may be less in the small division in comparison to the large division due to the size. It means RI has a size problem. But in order to understand this, what we'll do, we'll see the next question which we are going to solve right now. Okay, so this is the question in front of you. This question is given at the two places in your study material as well on the page number 8.7 and in the RTP of May 2018 as question number 13 as well. Okay, so start solving this question along with me. Let's read the question first. The following data pertain to two divisions, W1 and W2 of large shipping company. The return is given to you for W1 and W2. Instead of word return, the word controllable return must be written, but somehow in the question, if the word return is written, then we'll also try to solve the question according to this only. Then further, investment. Investment of W1 is 9 crore 60 lakh. The investment of WT2 is 1 crore 56 lakh. This is also given to you. The cost of capital of the company is also given to you, which is the 10%. You are required to interpret the conflicting result based upon the financial performance measure ROI and RI. Now, what we'll do? Firstly, we'll compute the ROI and RI. Then we'll try to appraise the result or discuss the result. Start computing ROI along with me. How will compute the ROI? We'll write down the controllable return, which is 1 crore and 20 lakh in case of W1, and then investment 9 crore and 60 lakh into 100. Please tell me what is the ROI of W1. Similar way, the ROI in W2, 31 lakh 20,000 divided by the amount of investment 1 crore 56 lakh. One crore 56 lakh into 100. Yes, those my friend who are online, please quickly answer me. What is the amount of the ROI? Yes, Chavi, absolutely fine. 12.5%. 12.5% in case of W1. In case of W2, it will be 20%. Please check it quickly. How much in case of the W2? Yes, 20%. Absolutely fine. The another one who is answering. Good. Okay. Now compute the RI as well. Quickly. Quickly compute the RI. All of you. What is the return of W1? The return of W1 is 1 crore 20 lakh. What is the required return? Good. Good. Priti, your answer is also fine. Good. 20%. Calculate the RI of W1. What is the required return? The required return is 10% of the invested amount. 10% of 9 crore 60 lakh. It will be 96 lakhs. So RI will be 24 lakh for W1. Similar way, compute the RI for the W2 as well. This is the amount of your investment. Okay. What is the amount of return? Amount of return is given to you. That is 31 lakh 20,000. Fine. Fine. Good. Good. 15.6. Yes. So required return here is 15 lakh 60,000. Hence, the RI is 15 lakh 60,000. Absolutely fine. Good. Good. Okay. So can you tell me, based upon RI, which division is better? Whether the W1 is better or W2 is better? Whose ROI is highest? W2 ROI is highest. Hence, we'll go for the W2. If we need to pick one division whose performance is better, we'll say that W2's performance is better. But if we need to take decision based upon the RI, residual income, then which division you'll say better? Obviously, the RI of W1 is better than W2. But it is misleading one here. Why it is misleading? Because if you see the investment of W2 is only 1.56 crores. But whereas the investment in the W1 is 9.6 crore. So the size of W1 in comparison to W2 is around 6.15 times. W1 W2 से 6 गुना बड़ा है, तो उसकी रेजिडुअल इनकम भी तो 6 गुना बड़ी आनी चाहिए थी. But here if you see, the residual income of W1 is even though not twice than the W2. Hence, where the size of organization are not same, RI is not good technique. And this thing is written here. Okay, now read the note along with me. RI is not a good way to compare the division that different greatly in the size. If the division are similar in the size, then RI shall be used as a performance measure. But if the division are not same in the size, it shall not be used as a performance measure. Further, this particular question basically is for what? To showcase the size effect limitation of the RI. Hence, there is a limitation in both RI as well as ROI. So what is the alternative? The alternative is EVA. But prior to study the EVA, we must solve another question on the RI and ROI. We are moving to now exam question. This was asked in the November 19 as question number 3. Okay. Let's read the question along with me so that we can solve the question. AKG Limited has 3 autonomous divisions. So there is a particular company called AKG, which is having the 3 divisions. The divisions are evaluated on the basis of ROI. So currently they are evaluating their division using the ROI technique, with the year-end bonuses given to the divisional manager who have the highest ROI. It means out of the 3 divisions, division 1, division 2, division 3, whosoever having the highest ROI will get the bonus and rest of the 2 will not get the bonus. Further, operating result of the division 2 for the last year are given below. So the data related to the division 2 is given to you. Sale is given, then variable expenditure is given, then contribution margin is given, fixed expenses are given, net operating income is given to you, and then the divisional operating asset is also given to you. Can you compute ROI based upon this? Surely, because the operating income is given to you as well as the divisional operating asset is given to you. But let's read the question further. The company's overall ROI for the last year was 18%, considering all the divisions. It means overall ROI of company is what? 18%. So required rate of ROI is what? 18%. Division 2 has opportunity to add new product line that would require an investment of 30 lakh. It means there is an investment proposal in front of the division 2, and this investment proposal required the fund investment of 30 lakh rupee. Other details of new product line are as follows. What are the details given to you? The sale of new product, which will be 90 lakh per annum. The variable cost will be 65% of the sale. 65% of 90 lakh, it will become how much? If you compute it in the amount, it will become 58 lakh 50,000 rupee. How I computed it? 65% of 90 lakh. Further, fixed expenditure is given to you, which is 25 lakh 20,000 rupee. The life cycle of product is also given to you, which is 5 years, which is not very much relevant to us. Now, the first requirement of the question, what you need to do? You need to calculate the last year ROI. Here the data of the last year given to you in this particular table. Okay. Now you need to use this particular table in order to compute the last year ROI. Friend, quickly compute the last year ROI along with me. ROI of division 2 for the last year. What is their net operating income? The net operating income is 16 lakh 80,000. What is their divisional operating asset? The 52 lakh 50,000 is the divisional operating asset. Multiply with the 100 because we need to compute it in a percentage. So how much it will be? If we solve it, it will come 32%. Yes, it is 32%. Yes, Chavi, absolutely correct. 32%. Moving further. Second question. Discuss whether the manager of division 2 would accept or reject the new product line if he takes decision based solely on the divisional ROI. Friend, if the division 2 need to take decision based upon ROI, what are their effort? What the manager of division 2 will think? That his ROI shall not fall from 32%. In all cases, his ROI must be maintained or remain more than 32%. So what we need to do? We need to compute the ROI of new project. If the ROI of new project is more than 32%, he will willing to accept the project because his departmental or divisional ROI will improve. But if the ROI of new project is less than 32%, obviously he will not accept the project. He will reject the project. So start computing the ROI of new project along with me. Okay. What is the sale of the new project? The sale or the revenue of the new project is 90 lakh. So this will be the sale. Okay. What is the variable cost? We already computed it into the amount 58 lakh 50,000 rupees. Very good, friend. Yes. Further, what is the fixed expenditure or the fixed cost? That will be 25 lakh 20,000 rupees. Now you need to tell me what is the controllable profit or the profit from the project or return from the project. 90 lakh minus 58,050 or 58 lakh 50,000 and 25 lakh 20,000. If you compute this, so it will come 6 lakh 30,000. Okay. What we need to compute? We need to compute the ROI. In order to compute ROI, what is the formula? The controllable profit which the project will generate 6 lakh 30,000 and the investment in the project which is 30 lakh rupee. Because we need to compute it in the percentage, so multiply with the 100. This will be 21%. Good. All my friends are giving the right answers. 6.3 lakhs, 6 lakh 30,000. Absolutely fine. Preeti, absolutely right. Good. Okay. I hope this is clear to you. ROI तक calculate कर लिया सबने. Everyone reaches to this particular step. Done. Now read the question again along with me. What was asked in the question? Discuss whether the manager of Division 2 would accept or reject the new product line if he take his decision based solely on the divisional ROI. What is the divisional ROI currently? 32%. The new project will fetch him how much? 21%. So it means if he opted for the new project, his divisional ROI will decline. His individual divisional ROI will decline. So whether he will opt for new project or product line or not? Answer is no. He will not accept the project. Agreed? He will not accept the project because his divisional ROI will decline. Can you compute the divisional ROI if he accepts the project? Can you compute the divisional ROI? If he accepts the new project, his investment will increase from 52 lakh 50,000 to 82 lakh 50,000. Whereas his profit increases from 16 lakh 80,000 to 25 lakh 10,000. So 25 lakh 10,000 divided by 82 lakh 50,000. You can compute the new profit as well, new ROI as well. If he accepts the project, then in that case, ROI will decline to 30.42% from the level 32%. So he will not accept the new project. What he will say? No, sir, I will not accept the project, to the CEO of company. Okay. Moving further to the last part of the question. Advise how the residual income approach can be used as an alternate financial measure for evaluation of managerial performance in the best interest of the company. So what question they ask you? you need to advise how the residual income can be used rather than ROI as a financial measure. And it will become a better source or the better from the interest of the company, better performance measure. Quickly compute the ROI, firstly, along with me of this particular project. Friend, what is the profit generated by the project? The profit generated by the project is 6,30,000. But what is the required profit? If you remember, it was mentioned in the question down under the table that the overall cost of capital is 18%. Preeti, what do you compute? 28%. Rajay, what do you compute? 28%. Okay, in the meantime, see this part C. So, in the part C, he asks us, you need to showcase how RI is a better than ROI. Okay. So, see this thing that the current project which is under the consideration yield the profit of 6,30,000. But what is the required return? If we don't invest this 30 lakh rupee in the new project, if we invest it somewhere else, then the company minimally require 18% of this. So the opportunity cost of this fund is 5,40,000. But rather than investing it somewhere else, if you invest it in the new product line, then you are able to generate how much? 6,30,000. So how much extra you are generating? What is your residual income? The residual income is 90,000. The residual income is 90,000. Since the residual income is positive, hence the project will be acceptable. Now you can see if the divisional manager take the decision based upon the divisional ROI, the project which he is rejecting, if he instead of using the divisional ROI, start using the RI approach, obviously the same project will become acceptable to him. So RI can be considered as a technique which is better than the ROI. Because if he reject the project, then the company would lost 90,000 rupees. But instead of rejecting the project, if the manager of division 2 accept the project, how much value he will generate, how much residual income he will generate? He will generate 90,000 as a residual income. It means company will earn each year 90,000 rupee extra than what it will if it invests the 30 lakh rupees somewhere else. So if consider the RI, then we can help the organization to earn 90,000 extra. But if we consider the ROI, then obviously the manager will reject the project, will not accept the project. Okay. Now we'll move further. There is another question which we need to solve, but we'll take a break here for the 5 minutes. Presently, it is 7:43. We'll meet again at the 7:50. We'll solve this particular question and then we'll move further to solve the another question or learn about the EVA. Okay, friends, we'll meet again after the break. We're taking the 5-minute break. Till 7:50. Okay, it's 7:44 right now. Hello friends, welcome back. I believe that you regain the energy in the break itself and able to solve the next question along with me. Yes, Preeti, I recognize the point which you just sent me in the query box. Friends, actually here while calculating, there was some clerical mistake. Instead of writing the 23 lakh 10,000, I wrote 25 lakh 10,000 because I don't have a ready-made calculation with me. I'm just depending upon the answer which is coming through you as well as calculating at my end. So it will not be 30%, it will be 28%. Okay. But still there will be no change to the answer. We just done this calculation in order to see that, okay, if the manager of division 2 accept the new product line, then how much he will able to earn. Even though if he accept the new product line, then the divisional ROI will be 28%, reduced to 28% from the 32%. So there will be no change to the answer, but no doubt there is a clerical error which we just corrected. Okay. Now moving to the next question, the important one here, because this question was part of your RTP and the study material as well. And if someone consider the November 2020 paper, the large number of questions from either the study material or RTP, and I strongly believe that this question has the feature which can be tested in the examination. So let's start solving this particular question, okay? Because this question is correctly to be said the question of the performance management, because here based upon the performance we are calculating the pay of the divisional manager. Okay, so read the question along with me. BYD Alloy Limited first opened its door in the 1990 for the business, and now it is a major supplier of the metal, sporting over a dozen different industry and employ expert to support each of the industry. So it mentioned that the company start working in the year 1990, and up till now the company has gained respective you can say that recognition in the respective industry. It's having the good number of the customer, as well as it's having the good bunch of the team member who support the industry, who are its client. Further, these include the wood and the panel, product manufacturing, health product, site furnishing, commercial and residential construction, etc. Although this line not have a worth for us in order to solve the numerical part of this question, but somehow it is written there, we acknowledge this. Further, it has grown through devotion to its customer. It means what is the key success factor for company? Considering the customer at the primary focus, dedication to the customer service, and commitment to the quality product. So it tells the strategy of company that it's relying upon the quality and dedicate the best, dedicate to the customer to deliver the best value. Further, the company has the two divisions, the division Y and division D. Each division work as an investment center separately. We understand the meaning of the investment center, that division which is capable to work independently as a strategic business unit, whose performance need to be measured individually at the departmental or divisional level. Moving further, the salary of, now careful, from here the information will be available which will be helpful to us in order to solve the question. So read very, very carefully. Salary of each divisional manager is 7,20,000 per annum, with the addition of an annual performance related bonus based upon divisional ROI. So the divisional manager will get the salary of 7,20,000, which is a fixed, which is the guaranteed one. Apart from this, they will get the performance related bonus. And in order to judge this performance, the tool which will be used is the divisional ROI, means ROI of respective division. Further, a minimum ROI of the 12% per annum is expected to be achieved by each divisional manager. So from the manager of division Y and division D, it is expected that they will generate minimum 12% per annum as ROI. It means this is the overall minimum rate the company which wish to earn as a hurdle rate. Okay. Further, if a manager only achieve 12% target, he will not rewarded bonus, because this is the minimum rate company which to wish to earn. This is nothing but the walk. This is nothing but the kind of hurdle rate for the company willing to earn. Company is not paying any kind of an bonus if you have the ROI of 12%. If you have ROI more than 12%, then you may get the bonus. You'll read next line. However, for every whole 1%, mind it very carefully. For every whole 1% point above the 12%, which division achieve for a year, a bonus equivalent to 3% of annual salary will be paid, subject to maximum bonus of 20% of annual salary. Now, this line is a bit complex. We need to break down in order to understand. So, if the ROI of, let's say, division is 15.23%, firstly, we need to ignore the points. We need to consider the whole point, because it mentioned here, whole 1%. What is the minimum profit which is need to be earned? 12%. So how much extra he earns? Although he earns extra ROI of 3.23%, but we'll see only the whole number, so we'll see it as 3%. Okay. And for each whole 1 point, he will get the bonus of 3%. And he is earning 3% of ROI extra, so he will get, for each one, he'll get 3. For second one, he'll get again 3. For third one, he'll get again 3. So total, he'll get the bonus of 3% plus 3% plus 3% plus 3% means the 9% bonus he'll get. Agreed? Taken another example in order to understand this. Let me rub this first, so that I'll be having a reasonable amount of space in order to explain this fact again, so that if any of my friend not able to understand, must be able to understand this in very clear manner. Okay. Let's take an example. If the division Y earns the ROI of 16.8%, okay, we'll say minimum 12% you need to earn. Over and above what you earn from the 12%, you will get the bonus. Over and above 12%, he earned 4.8%. Then we'll see the whole number. Here the whole number is 4. We ignore 0.8. We consider only 4%. And for every 1% excess ROI, he will get the bonus of 3% equivalent to the salary. तो इट मींस यहां पे कितनी बार 3% आएगा? 4 बार. 3%, 3%, then again 3%, then again 3%. It means he'll get the bonus equivalent to 12% of the salary. I hope this point is clear to everyone. But let's take another example. If the company earns the ROI of 22%, 12% minimum need to earn, the company earn 10%, the division earn 10% more ROI than what it should earn, and the bonus will be 3% for each 1%, 30% bonus will be there. But no, there is a maximum cap of 20% bonus. Agreed? So I hope the thing is now quite clear to you. Basically मसला क्या है? जब भी आप ROI 12% से ज्यादा कमाओगे, तो हर एक पर्सन जो आपने 12% से ऊपर कमाया है, उसके लिए आपको आपकी सैलरी का 3% बोनस की फॉर्म में दिया जाएगा. If someone earn 2% of ROI more than or in excess to 12%, he'll get the 6% of salary as a bonus. I hope it is quite clear to you. Now read the further fact given to you. The figures belonging to year ended 31st March 2020 are given below. The division Y and division D. So the revenue is given to you, profit is given to you, then the head office cost is given to you, then the net profit is given to you. Please stop it here. We need to here note very important point. From the very beginning of the lecture, we are keep on saying the word controllable profit need to be taken whenever we need to compute the ROI. Here the controllable profit is 5290 and 3940. It is not 2760 and 2572. Why? Because head office incurs certain cost and they allocate the portion of cost on us. They ask us to absorb certain component of the corporate cost, which is not controlled by divisional manager. Divisional manager not took the decision that how much the head office need to incur. So divisional manager cannot be held responsible for this cost. So while calculating ROI, we will not consider this head office cost. We'll take our decision based upon the profit which is controllable by division. Hence, which profit will take? Profit or net profit? Will take the profit, because the profit is directly controlled by the manager of division Y and manager of division D. But whereas head office expenditure are incurred by and controlled by the CEO of the company, they are not controlled by the divisional managers. Hence, the divisional manager is liable or shall be measured their performance based upon the profit earned by them, controllable profit. Agreed? Now, with this question, you're surely able to understand the importance of the controllable profit. Okay, moving further. The current asset is given to you, the cash is given to you, the trade payable is given to you. Why these three things are given to you? In order to compute the capital employed, in order to compute the investment amount. How you will compute that? You will add the asset, both the current and the non-current, then reduce the current liability out of that in order to compute the capital employed. Okay. Now moving further, the manager responsible. What is the name of the manager for the division Y? High. And what is the name of the manager responsible for division D? Phi. So high phi are the two managers which is responsible for division Y and D respectively. Moving further. During the financial year 19 and 20, for which the data is given to you, Phi, the manager of division D, invested 13.6 million in the new equipment. So Mr. Phi invested 13.6 million in the new equipment, including an advanced cutting machine, which will increase the productivity by 10% per annum. It means Phi is future oriented. He don't only consider the profitability in the short term, he is also considering the company's profitability, sustainability, and growth in the long term. So he is buying the new equipment which will enhance the productivity in the years to come. Means company can grow by producing and selling more number of units. Further, High, the manager of division Y, has made no investment during the year. This is what we earlier mentioned while studying the concept of ROI. Because in order to increase the ROI, what the divisional manager tried to do? They tried to defer the investment so that denominator must become lower. Because what is the formula of computing ROI? The formula to compute ROI is controllable profit divided by investment. They try to understate the investment by deferring the capital expenditure. Okay, so moving further, even its computer system need updation. It means Mr. High just only to get the good performance related pay, ignoring the need of its department. He is not going in the sustainable manner. He is only going in the profitable manner. If you are profitable, not sustainable, then you can't sustain for a long run. Further, division Y manager has already delayed the payment to the suppliers. Apart from delaying the capital expenditure, he is not making payment to the trade payable. Why? Because when we compute the investment, trade payable need to be reduced. If the amount of trade payable is more, then the amount of investment will come less. Again, the denominator will be less. Hence, his profit in comparison to investment as percentage will be depicted more, overstated. Hence, he is again trying to distort his performance by not making payment to the payable as and when they become due. This will cause an trouble in the long run, because if the supplier feel it not as per the purchase order, their payment are delayed more than the credit term, the relation with supplier may get disturbed, and in the long run, company may need to bear the heat. Further, due to the limited cash and the bank balances, although the cash balance at the division Y is still better. It means he is speaking lie to the supplier, saying that we don't have a cash and not making payment to you. Instead, he's having the cash. But why he's not making the payment? We know the catch, that he tried to overstate the ROI basically. Okay. Now understand the requirement along with me, my dear friends. And I need your support in order to calculate as well in your participation, because your participation will give you the confidence that, okay, we are able to solve the question. Now read the requirement one. For each division, compute the ROI for the year ending 31st March 2020 and justify the figure used in your calculation. We already mentioned that we are not going to consider this net profit. We are going to consider this profit, which is 5290 and 3940. And why we are going to do so? Because we are solving this question of ROI in the chapter of responsibility accounting, where the manager will be held responsible for item under his control, and the head office expenditure are not under the control of divisional manager. We are computing ROI for divisions, divisional ROI. Agreed? Now compute the ROI, please. What is the formula of ROI, friends? You know the formula: controllable profit divided by investment. Firstly, for the division D, whose manager is 5. For him, we'll compute first. Okay. Whose manager is 5. What is the profit? The profit is 3940. And the investment is how much? 29960 plus 6520, which is nothing but the current asset, minus the current liability, which is 2800. Okay. Multiply with the 100 because we need to compute it in a percentage. Compute, anyone? What will be the rate come? Okay. What is the rate of ROI in case of division D? Okay. This will become 29. This will become 33,680. Okay. So 39. Preeti, compute for the division D as well. According to me, it is 11.7%. Compute it and check it whether it's 11.7% for you as well. All my friends who are online along with me, compute it for you as well, whether it's 11.7% in your case as well. And now we are computing it for the division Y, whose manager is high. What is the profit? The profit is 5290. What is the amount of investment? The 19,520 plus 4960 reduced by 5920. If you ask me to compute the capital employed or the investment, then the investment of individual department is 18,560. Because we need to compute it in a percentage, so multiply with 100. Yes, Chavi is computing good. Good. This is 28.5%. Absolutely fine. Thank you, friends. Good. So read the requirement A along with me once again. For each division, compute ROI for the year ending 31st March 2020. Justify the figure used in your calculation. You can easily justify this, I believe. What you need to write, because we are computing the ROI for division under the responsibility accounting. Hence, only that profit need to be considered which is controlled by divisional manager. Hence, we are ignoring the head office cost, which is mere absorption or allocation. I believe explanation is clear to you. And divisional ROI you already computed. In the case of division D, it is 11.7%. In the case of division Y, it is 28.50%. Okay. Now read the requirement B along with me. Compute the bonus of each manager for the year ended 31st March 2020. I hope you remember the rule of the bonus. I'll repeat it once again for you. Minimum you need to earn 12%. If you earn less than 12%, you will not get the bonus. How much above you earn from the 12% need to be seen in the full percentage term. Then for each percent of ROI, excess of 12%, you will get the bonus of 3% of your salary. Now tell me whether Mr. Phi, who is the divisional manager of division D, will get the bonus. Answer is no. Why the manager of division D not get the bonus? Because his ROI is 11.7%. And what is the minimum ROI need to be earned? Okay, I'll show it to you. See it along with me. It is clearly mentioned. If the manager only achieved the ROI of 12% target, he will not rewarded with the bonus. It means if he earns 12% or less than that, there is no bonus. Hence, Mr. Phi will not get any bonus. So, Mr. Phi, who is manager of division D, will not get any bonus. No bonus. Now moving further to Mr. Phi. How much ROI in excess to the 12%? 16.5. But we need to consider the complete number. So what is the excess ROI? 16% points. 16 point he earns extra. And for each point he'll get the 3% bonus. 3% of salary. So how much bonus he'll get? 16% he earn in excess into 3%. So he'll get the bonus equivalent to 48% of salary. But friends, there was a limit in the question that the bonus cannot be more than 20%. So he'll not get 48%. His bonus will be limited to 20%. I hope it is clear to you that his bonus will be limited to 20% rather than the 48%. Now, 20% of what? 20% of the salary. How much was the salary? The salary of each divisional manager per annum is 7,20,000. So he'll get 20% of. So he'll get 20% of 7,20,000. That is 1,44,000. So this will be the bonus given to Mr. Phi, who is the manager of division Y. Okay. I hope it is clear to you. The answer to question B is clear to everyone. Quickly write down so that we can move further. Now we will read the point number C. Good. Very good. Good. Okay. Now we'll read the point number C. Discuss whether the ROI provides justifiable basis for computing the bonuses to the manager and the problem arising from its use at the BYD for the period or the year ended 31st March 2020. First of all, we need to mention the point that ROI is not justifiable basis for computing the profit. Why? Because it has a shortcoming of sub-optimization or lack of goal cognizance. Okay, so we need to mention that it will lead to a situation which will be set the situation of sub-optimization, where the divisional manager are concerned with the performance of division, not with the performance of overall organization. Likewise, what Mr. High did here, High deferred the capital expenditure. So this is the first problem which you need to highlight. What is the first problem? That Mr. High defer the capital expenditure. Number two, he is not making payment to the supplier. So relation with the supplier may get disturbed. And number three problem, Mr. Phi, who is the manager of division D, who is taking the decision in favor of the company, will not get bonus, so he will feel demotivated. So you need to write Mr. Phi may feel or maybe feel demotivated. Okay, so these are the three major problems which is associated with the current performance measurement system of the company. Okay, I hope this thing is quite clear to you. Can we move further? Quickly answer. Can we move further to start the new concept? Okay. Now we need to start the EVA, friend. EVA is advanced version of RI. The only difference is RI is from the perspective of entrepreneur, whereas EVA is from the perspective of enterprise. The second difference, RI uses the accounting profit, but EVA is the measure of economic profit. Although the method is absolutely same, what the RI say that you need to calculate your return and reduce it with the required return. Similar way, what the economic value added say, compute your NOPAT and then reduce it with the required return, which will be calculated with the help of multiplication of the WACC to the opening adjusted capital. Although we are using the word capital, but in actual, this is the opening adjusted capital. But why there is a need of the EVA? What are the shortcomings of the other financial or the profit oriented techniques? We need to understand those. So read the shortcoming first, then we'll move into the EVA and we'll study some of the adjustment which is need to be done in the profit and the capital in order to compute the EVA. Because this time the question number 3 of your question paper in the November 2020 20 marks question is from the EVA itself, water utility services. Well, so we need to solve the question as well. Okay, But prior to solving the question, we'll understand what are the various adjustments, so that rather than just solving the question, you must be able to capture or handle any question which may be asked in the examination. Firstly, we are going to read these major shortcomings. Read the shortcoming along with me. While calculating the accounting profit, the cost of equity is ignored, unlike the cost of debt. Obviously, when we compute the accounting profit, prepare the P&L account. In the P&L account, no doubt, just for the understanding, I'm drawing here the P&L account in the form of T-shape. We need to prepare it in the vertical form and with the name statement of profit and loss. Okay, but we are not doing here the effort. So just in order to understand, in process of preparing the P&L, we write down the interest as an expenditure on the debit side of the P&L. But we don't write the opportunity cost of equity share capital, which is also need to be written. Because if we are computing the profit, what a person earns, then we must consider the opportunity cost of his capital. Take an example along with me. We simply say that by investing the 100 rupee in a business, the owner earns, let's say, 20 rupees. But if he invests 100 rupees somewhere else, let's say he make an FD in the bank, still he will earn the 6 rupee. So how much extra value he generate? He don't generate 20 rupee. He generate only extra value of 14 rupees. So it means the shortcoming of considering the entrepreneurial profit or the accounting profit is this, that we ignore the opportunity cost. It is fine with the financial reporting, but not fine with the student of the management accounting. Even though in the financial reporting too, in the year 1990s, the Stern Steven, which is an consultancy firm from two persons, the Jules Stern and the Bennett Stewart, what they start arguing? They start arguing that the profit which we are computing is a strict interpretation of accounting principle and the standards, which is not depicting the true value addition. We need to see the true value addition. Okay. So again, read the point number 1. While calculating the accounting profit, the cost of equity capital is ignored, unlike the cost of debt. We write down the interest, which is a charge on the debt. Even though this gives the tax shield to us, the burden of tax reduced, but we don't write the cost of equity here. Hence, the profit we computed is not value added. It's fine. We can say it profit, but we can't say it value added, because value added, obviously, something less than what you compute as a profit. And it can only be computed if we reduce the opportunity cost of equity share capital. Agreed? Moving further. A company can generate the wealth only when it earns the return in excess to the return required by the provider of the capital, which include both the equity and the debt. Friend, I hope you have a reasonable knowledge of the SFM as well. And many of you already passed or studied the paper of the SFM. Some may opt the group 2 prior to the SFM, but still I feel that you have a reasonable knowledge of the concept. EVA is like the alpha, which you compute as a difference between the actual return earned by a company or by a portfolio over and above the expected return. So this point is try to highlight this phenomena only, that on the capital you need to earn the WACC. This is your required return, and we wish to see that how much your actual profit is more than your required profit. And if you don't consider the required you can say that return and say that my profit is this much, this will not justify that. Okay, moving further. Second point, accounting profit can be distorted by choice of accounting policy. The policy like which depreciation method you will use, which valuation of inventory method you will use, how you will gonna recognize the employee benefits, how you'll gonna impair the asset, which signal you will consider as a signal, which signal you will not consider as an indicator that now the impairment is need to be done. Okay, so there are many aspects in the accounting policy which are subjective to the accountant. Hence, the accountant or the management can manipulate, or you can say that window dress, or can do the design accounting, which may be shown a misleading figure to the investor or the management as a right interpretation of the performance. In order to interpret the correct performance, we will use the EVA rather than the accounting profit. Further, hence the cash flow or the NOPAT is more relevant to the wealth of shareholder rather than the accounting profit. It means we will not rely upon the accounting profit. We will rely upon the economic profit, and EVA is the measure of economic profit rather than the accounting profit. Last point. The accounting profit is a short-term measure. It ignores the longer perspective. Okay, we need to consider the longer perspective. The expectation of the equity shareholder is not only dependent upon the short-term objective of the company or the short-term aspect of the company. It also considers the long-term growth perspective and sustainability perspective. Hence, by computing the EVA, we are seeing or trying to see the longer picture. Okay, now moving further, let's discuss the formula of the EVA. Then we'll go into the discussion of the various adjustment which is need to be done. But prior to that, we'll solve an easy question and then we'll move into the adjustment. Okay. So the name of two persons are written who constitute a firm whose name is the Stern Stephen, Mr. Joel Stern and the Bennett Stephen, the founder of a New York-based consulting firm, Stern Stephen and Company. During the year 1990s, promoted the concept of EVA. EVA is the performance measurement system which uses the economic profit rather than the accounting profit. EVA can be calculated as NOPAT minus the weighted average cost of capital and the capital. Now, let us discuss each element of EVA in detail. First one, the NOPAT. NOPAT stands for net operating profit after tax. If you started with the PAT, then what you need to do? You need to make the adjustment for non-cash items. Apart from the non-cash item, you need to make the adjustment for the depreciation and certain other aspects. Let's start understanding what are the various adjustments required. Okay, I'm taking you to the another document in order to understand what are the various adjustments required. I hope this is visible to you. I'll enhance the size bit so that all my friends able to see this. Okay, I believe now it is visible to everyone. Okay, I believe that now it is visible to everyone. What are the various adjustments which we need to do? Although there is an additional theory available with me, but I feel that we able to understand this theory with the help of the table given below. What I do to help you so that you must have a ready-made notes along with you. I'll also hand over this to the IT team so the IT team can also upload this in the download section so that you can download it from the download section of the PPT. Okay. What is mentioned here that as per the Stern's table, there are around 160 adjustments, but in the examination, only 5-6 adjustments are quickly asked from us. like the adjustment of the expenditure on the promotional activity, advertisement, research and depreciation, and employees training, then the adjustment of depreciation, then the adjustment of provision, then the adjustment of the non-cash, and the treatment of operating lease. There are some important points which I need to discuss along with you. Okay, like the point of the operating lease we need to discuss, because there is an implication of the INDAS as well. Okay, friends, now we are moving to the table below in order to understand how the various item will make impact upon the profit, which we need to consider as a NOPAT. Okay, the accounting profit, when we compute, we consider the advertisement expenditure as recurring expenditure. Although sometimes we consider it as a deferred revenue expenditure too, but we consider it as a revenue expenditure on a large sum basis. The research and development, obviously, till the time there is a no marketability of the product, we will you can say that write it off, and then afterward we'll capitalize it. But what the EVA believe, that the research and development, if you are incurring not only on developing the product, but also on developing the new processes, developing the new capability, it will give you advantage in the long run. If you are doing the advertisement, it will give you the advantage in the long run. If you are doing the staff training, it will not give you the advantage only in a one period. The learning curve of employee improves and employee become more productive. He is consuming less number of labor hours, so it will give you the advantage over the period. Hence, the cost of advertisement, promotion, the cost of R&D, or the expenditure of employee training or the staff training shall not be expensed off in the current P&L. Instead of expense of it in the current P&L, what we need to do? We must capitalize them. Now, what will happen? When we prepare the P&L of the current year, obviously, on the debit side, we write down the expenditure of R&D, but we should not write it as an expenditure in order to compute the EVA. So while computing the NOPAT, what we'll do, we will add back advertisement expenditure, research and development expenditure, and staff training expenditure to the accounting profit to compute the NOPAT. What we are studying in this particular table, we are studying the various adjustments which we need to done in order to compute the NOPAT and adjusted opening capital. Okay. Currently, we are seeing the NOPAT. In today's lecture, we only able to see the NOPAT. Okay. We will not be able to see the capital employed. Hence, only focus on the changes in the profit. No doubt, in the next lecture, I'll spend the 15-20 minutes again in order to revise this, and then we'll solve the question. But right now, just focus on understanding that how the NOPAT will be impacted. Okay. So again, I'm mentioning for my friend that who not able to understand it in the first go. Friends, advertisement, R&D, and staff training will not only benefit the organization in the year in which we incur it. It will benefit in the upcoming year too. Hence, instead of expense of the item in the year in which it is incurred, we must capitalize the item. It means the profit of current year, which is reduced because we write down the R&D expenditure, advertisement expenditure into P&L account. Now that profit need to be increased back. Hence, we are adding back these expenditure to the current year profit. Agreed? I hope it is clear to you. But obviously, if we say that we need to capitalize it, if we capitalize these expenditure, obviously it has a limited utility. Its utility is also for certain limited economic useful life. We need to amortize it. So whatsoever be amortization or the reasonable amount of depreciation that need to be reduced. Take an example along with me. If this is the year 1 and in the previous year, year 0, we incur certain R&D expenditure, and we said that R&D shall not be written as an expenditure. Instead of that, it must be recognized in the balance sheet as an asset, and then slowly we must amortize it. So if we incur the 100 rupee on the R&D in the last year, which we are now capitalizing as an asset, now we need to amortize it now. If you recognize, okay, this R&D or this advertisement will give us the benefit for the 4 year, each year 25 rupee we will amortize. So what you need to do, in the current year, your R&D expenditure, let's say 80 rupee. Now this 80 rupee you need to add back, and this 25 rupee you need to reduce here. I hope now it is clear to you. If you allow me, can we see the impact upon the capital employed as well? See the impact upon the capital employed. In the current year, what you see, this 80 rupees shall not be considered my expenditure. It must be capitalized. Hence, whatsoever be my capital employed at the beginning of year 1, it will be increased by 80 rupee. Hence, the capital at the end of year 1 or at the beginning of year 2, when I need to compute from the year 1, I will have to add the 80 rupee. Okay. So this thing is mentioned over here. Moving further, depreciation. Friends, the accounting depreciation is nothing but the pure feature of accounting policy. Once you decided, okay, we'll charge the depreciation as per the SLM method, the straight line method, whether the each year wear and tear is same of the asset, no. Some year the wear and tear is more, some year the wear and tear is less. Take an example of current year. Current year, the people know not using the machine. Some of the machine are such a nature which is having the capacity of producing limited number of the unit. In those cases, the depreciation shall be less due to the COVID effect. But some of the machine are such a nature, if you don't use them for a month or a 2, they block, they jammed, they need to be overhauled. In those cases, the depreciation shall be more. Hence, accounting depreciation is not a true representation of wear and tear. So what will you do? The accounting depreciation which you write down in the P&L, that you need to add back. And instead of that, you need to deduct the economic depreciation. Agreed? Friend, obviously, if you change the profit, if you change the amount of depreciation, the amount of non-current asset will also change. So you need to make adjustment in the capital employed too. Okay. This is only the reason whenever we compute the EVA, we shows our capital or the value of the capital asset at current replacement cost. We wish to depict the true picture. We wish to charge the actual depreciation, which is a true representative of wear and tear. Obviously, then we wish to value the capital asset, which is exactly their current replacement cost or the price in the market. It means if we are going to replace our asset right now, we go to the market and say, okay, we'll buy the same set of the asset in today's date. What will be their cost to us? Okay, I hope now it is clear to you. Further, the operating lease. Friend, there is a difference in the treatment of the operating lease and financial lease. When you took the asset on the financial lease, what you do? You will charge the depreciation as being an owner of the asset. Okay, and you will capitalize the lease rental. But in case of the operating lease, this not happen. So what the Stern Stewart suggests, because they suggest this thing in year 1990, not in year 2020. Okay, we need to understand a catch on this later on. So what they suggested in year 1990, when they advocates for this EVA, they said that by taking the asset on the operating lease rather than the financial lease, what company will do? Company is avoiding capitalizing the lease rental. It means company is trying to show less capital through which it can overstate its EVA. Hence, operating lease shall also be considered and treated as like the financial lease. Hence, the lease rental which you pay shall not be considered as an expenditure in the year in which you pay it. It must be capitalized. Obviously, if you prepare the P&L account and write down the operating lease rental, your profit will come down. But what they say, that you need not to write it in the P&L. Instead, you must capitalize it in the balance sheet as a leasehold asset. So what will happen? It will increase the value of capital employed, but at the same time, it will reduce the, what will happen? It will, earlier when you write it in the P&L, it will reduce the profit. Now what you need to do? You need to add it back in order to reinstate the profit. You write it back. But the amount which you capitalize on account of the lease rental, on that the depreciation also need to be charged. Hence, you need to deduct the depreciation on the asset, on the operating leased asset. But friend, understand one thing here. This treatment is required or valid only until the International Accounting Standard 17 was not replaced with the IFRS 16 or INDAS 116 in case of the India. Because INDAS 116 gave only single leasing accounting model. It don't differentiate in the operating lease and the financial lease. No doubt, it has a specific treatment for the low cost asset. But still, many of academicians keep on saying this old concept, and you may find the question in the examination based upon the old concept, which is not relevant at all. There are traditional thinkers, hence they feel that it is written, we must teach it, operating lease को भी add back करना है और capital adjustment करना है और depreciation निकालना है. So they keep on saying. They not understand that now in the accounting treatment has been changed. So you need to see for which company you are computing the EVA. If you are computing the EVA for a company which prepare its accounts after applying IFRS 16 or INDAS 116, then you need not to be, you can say, that required to do this treatment or to do this adjustment, because already they are treating it in a same manner. There is no distinction between the operating lease and the financial lease. But if you are considering that company for computing the EVA whose accounts are prepared based upon the traditional GAAP or the accounting standards only, then you need to adjust the operating lease rental. अगर in short कहूं तो ऑपरेटिंग लीज रेंटल जो आपने पे किया उसे अपना खर्चा ना मानते हुए आपको उसे कैपिटलाइज करना है, तो प्रॉफिट में ऐड बैक कर दो और कैपिटल में भी ऐड कर दो, क्योंकि कैपिटलाइज करा है तो कैपिटल बढ़ जाएगी. And what other thing you need to do, because you capitalize, hence the capital amount need to be amortized over the period, over the lease period, hence the depreciation must be charged. Okay, now the next point, provision. Friend, whether provision leads to any outlay of the cash? No. When we are considering the NOPAT for the purpose of EVA, we are cash flow oriented rather than the profit oriented, because profit is nothing but an outcome of the accrual concept application. It's highly prudent. Even though the loss is not occurred, still we make the provision for the doubtful debt or the bad debt. We just make the provision. Still that amount is available with us and invested in the business as a capital. The day when actually the debtor say no to pay, then we can say, okay, we're not able to receive the amount which we otherwise supposed to get, hence our capital reduced, working capital reduced. Okay, so till the time provision not actually expensed off against the actual loss or actual expenditure, it shall not be considered for the purpose of calculating the EVA. Hence, if you during the year, while calculating your profit, write down, we make the provision for doubtful debt, or we make the provision for some other element, then what you need to do? Because due to making more provision, due to increase in provision, you reduce your profit. Now you need to reinstate your profit by adding back the provision. So if there is increase in the provision, add back. If there is decrease in the provision, prior to start of the period, the provision was 40 lakh. Now you wish to reduce it to the 30 lakh. Hence, during the year, you reverse the provision of the 10 lakh, due to which your profit increased by 10 lakh. Now you need to reduce your profit. Okay. So you need to see whether there is an increase in the provision or there is a reduction in the provision. Now what will happen? Because the amount of provision nowhere go outside the business boundary, it is still invested in the business. Hence, it is need to be added back to the capital employed as well. Okay. Now the non-cash expenditure. Non-cash expenditure is not an outflow of the cash, hence need to be added back. Further, it's not an outflow of the cash, hence still part of the organization, hence need to be added back to the capital employed, but it will impact the closing capital employed, not the opening capital employed. And whensoever we need to take the capital employed for the purpose of the EVA, we need to take the opening capital employed, because the Stern Steven believe it will take an year to reap the benefit of the capital. It means if you invest the capital at the beginning of the year at Y0 until it starts generating result, it will a period of year. After 1 year, it will start generating the result for you, start generating the profit for you. Okay. So we are not considering the average capital. We are not considering the closing capital. We are considering the opening capital. So what you will do, that during this year, you incur certain non-cash expenditure. Firstly, you will add back that to the profit and accounting profit in order to compute the NOPAT. Secondly, you will add back it to the capital, but it will enhance the closing capital, not the opening capital. So it is not going to impact our capital for the purpose of the EVA, but obviously it will impact our NOPAT. Further, interest paid. Friend, what is the formula of the EVA? The formula of EVA is the NOPAT reduced by the weighted average cost into opening adjusted capital. In the opening adjusted capital, we took the total overall capital, which include equity share capital, preference share capital, and debenture or loan or any long-term borrowing. And in the walk, apart from the KE, KR, KP, the KD is also included. Hence, the interest in the form of KD on the value of debt is reduced here. Then why we will reduce it from the profit? Hence, while during the year you compute your P&L, and while computing the profit, if you reduce the interest, then you need to add back the interest while computing the NOPAT. तो प्रॉफिट निकालते समय जो इंटरेस्ट माइनस करा है वो ऐड बैक कर दो नोपैट निकालते समय, बिकॉज इंटरेस्ट आपने ऑलरेडी रिड्यूस कर दिया है. किस फॉर्म में लेकिन रिड्यूस करा है? इन द फॉर्म ऑफ वैक मल्टीप्लाइड विद द कैपिटल. ओके, नाउ वन मोर थिंग friend, when you take the KD here, you'll take after tax. You take the cost of debt after tax. When you take the profit here, you also taking the profit, net operating profit after taxes. Agreed? Hence, if you not started your calculation with the PAT, instead of that, you started your calculation with the operating profit, from which you need to reduce the taxes. Then you need to reduce the actual tax paid. And how much actual tax is paid, that we'll learn in the next session. How we need to adjust the, you can say that deferred tax into that we'll learn in the next lecture. So the discussion pertaining to the EVA, we hold it up here. we learn that how the NOPAT will be calculated. Although I already prepared this statement for you, but it will become too, you can say that, hectic for today's session. So in the next session, when we'll meet again, we will surely discuss once again the various adjustment that is need to be done to the PAT in order to compute the NOPAT. Likewise, we need to add the accounting depreciation, reduce the economic depreciation. We need to add the research, training, and advertisement cost, but need to reduce the amortization on these. We need to add back the non-cash expenditure. We need to add back the provision if there is addition in the provision, but if there is a reduction, we need to reduce the operating lease rental need to be capitalized, hence need to be added back to the profit. And if the obviously, when we compute the PAT, we reduce the interest, we need to add back the interest. But when we need to add back the interest, it must be net of taxes. Because if we are not considering the interest as an expenditure, then tax benefit or tax shield of interest shall also not be considered. Hence, the tax benefit on the interest shall not be enjoyed. So due to this, when we add back the interest, we not add back full interest. We add back the interest net of the tax benefit, which we otherwise enjoyed if we consider it as an expenditure. Don't worry, in the next class, I will do one illustration on this so that you can understand this in a very well manner. And obviously, the depreciation on a lease item need to be considered. Okay. So moving back to the discussion. So we discuss about the NOPAT, we discuss some of the thing about the capital, but obviously it is not firmed yet. Hence, in the next class, when we start, we'll firm. And in the walk, we'll see that how we need to compute the walk. Believe me, here you will not get the application of the CAPM, the capital asset pricing model, which was given by the William Sharp while suggesting the SML, security markup line. You're not gonna apply that. Here you'll get the easy question where either the value of equity or the value of debt is given. You need to apply the cost of equity and the cost of debt after tax in order to compute the walk. So you'll get only this much in the strategic cost management. You'll not get the wide application of computation of the WACC, but there are some practical aspects which we need to consider, whether to take the market value or to take the book value while computing the capital. Why only you need to take the opening, although I mentioned that as per the Stein statement, it took an year in order to reap the benefit from the capital. Friend, in this page itself, I gave the adjustment as in separate note. So what I believe that you'll read it as a homework, and when you come back on a Monday in the next lecture, you'll come back after reading this so that when we are in the revision mode of the adjustment to the profit, we can done it in an easy manner or in the quick succession. And then afterward, we'll solve these questions. Okay. So now we are holding up for the EVA, but I promised to my friends, because you studied the chapter number 4 along with me, that we'll solve the 2 question which is asked in the November 2020 attempt from the chapter number 4. I'll solve those questions with you. So I'm moving to those questions. Okay, because I promised, so I'm solving. So those friends who connected with me only for the chapter 8, they may leave the meeting, but if they wish to solve the question, because obviously my advice is that you must solve the question. And if they wish to solve the question, they can continue with me. Okay. So there are some students who in the beginning of the lecture asked me, "Sir, please solve the question." I remember one name, Anjali was there, who asked me, "Sir, solve the question." Okay, I'm solving the question. Please see it that what are the questions asked and how we need to give the suggested answer. Okay. Friend, there are 2 questions. The question number 2, which is from the target costing, and the question number 5, which is from the life cycle costing. Firstly, I'm going to take the question number 5. Read along with me. AMKP International has developed ultra modern smart LED TV with the latest feature. It has been developed after extensive research and is ready for manufacturing. So right now, company done with the R&D. company developed the design and going to manufacture the product. The firm has incurred 6,50,000 as development cost on this LED TV. So in order to develop the product, the R&D cost company incurred till date is 6,50,000. Since this cost is already incurred, hence it becomes the sunk cost, hence irrelevant for decision making, not relevant, need not to be considered. Further, the firm is deciding on the plant capacity, which could cost 40 lakh rupee for manufacturing 600 units. It means it has a first alternate. If it go for a machine which cost them 40 lakhs rupee, then they will able to manufacture 600 units in the factory. Okay. If they buy a machine which is of the 40 lakh rupee, then they able to manufacture how many units? 600 units with additional outlay of 40%. 40% of what? 40% of cost of machine, which is the 40 lakh. If they, rather than buying the machine of the 40 lakh, they buy the machine which is of 56 lakh, then the plant capacity can be increased by 50%. 50% to what? 50% to 600 unit level. Then the plant capacity will be 900 units. Okay. The relevant data pertaining to the life cycle of the LED TV at different capacity level are given below. So the data is given to you. Now we are going to see that what data is given to you. Okay. So this much data is given to you. No doubt, I got the paper in this manner only. So the image is not quite clear. It's a bit blurred, but I feel that you are able to read it. Okay. So at the 600 unit level, the sale price is 45,000. At the 900 unit level, the sale price is 41,400. So what will be the revenue at two stages that can easily be calculated by multiplying the sale price to the expected unit? Further, the variable selling cost is given to you, that is the 12% in both the cases. Then further, the salvage value is also given to you, the 20% of the plant cost. The plant cost here, when we are producing the 600 unit level, is 40 lakh. But the plant cost here, when we wish to produce or have a capacity of a 900 unit level, is 56 lakh. Likewise, we computed on the previous page. Further, the PV ratio or the contribution ratio is 30%, friends. It means even if you produce the 600 unit, then also you will generate contribution of 30%. Even if you produce 900 unit, then also you are able to generate 30%. So this is a big change from the question given in the study material, because in the study material, the PV ratio is only written for the one capacity level, not for both the capacity level, but here it is given for both the capacity level. So question become more easy. Now, can you tell me what is the revenue? How the revenue will be calculated? 45,000 is the price. And how many number of unit we are manufacturing and sold? 600 unit. If any of my friend is online, please give me the answer quickly. So the revenue to me is 2 crore 70 lakh. 2 crore 70 lakh. Okay. Similar way, if we are producing 900 unit, then what will be my revenue? Then the revenue to me will be 41,400 into 900 unit. This will become 3 crore 72 lakh 60,000. Okay. Now the contribution. The PV ratio is given to you. How the PV ratio is calculated? Contribution divided by sales multiplied with the 100. So you can easily calculate the contribution by multiplying it with the 30%, multiplying it with the 30%, multiplying it with the 30% again. So what is the contribution here? If you are producing the 600 unit and selling the 600 unit, it will be 81 lakh rupee. What is the contribution here? The contribution here is 1 crore 11 lakh 78,000 rupee. But in order to generate this much of the contribution, you need to buy a machine which will cost you 40 lakh. And here, in order to generate this much of the revenue, you need to buy a machine which will cost you 56 lakh. So this will be outlay or the expenditure which is need to be reduced. But the machine after the lifespan can be sold and it has a salvage value of 20%. So here the salvage value is 20% of the 40 lakh, which will become 8 lakh. Good. Good. Those are answering good. Aman, good. Sir, from where do we get? Don't worry, Aman, I'll upload the paper. I'll ask the IT team, hand over this paper to them so that they can upload it. Right now, solve the question along with me. So you'll get the confidence. Okay? Good. Chavi is responding well. Good. Further. So, similar way, the machine which you bought for 56 lakh, that will be sold for the 20% of 56 lakh. So, what is the residual value here? The residual value, Rajay, here is 11 lakh 20,000. Can you tell me the net profit or the contribution or the return which you earn here? 81 lakh from the sale of product. But the 40 lakh machine you need to buy. But that machine can be scrapped for the 8 lakh. Hence, the net gain or the return is 49 lakh rupee. If you manufacture and sold 600 units, here the gain or the return is 66 lakh 98,000 rupee. Agreed? Now read the question along with me. Advise the SCMPE International regarding the optimal plant capacity to install the LED TV life cycle is 2 years. Note, ignore the time value of money. So you need to suggest which one is optimal. Friend, if I consider the profitability and return, the answer is quite clear. We will go for the 900 unit. Agreed? Number one. Number two, because in the question, the verb use is advise, not only evaluate. Hence, you also need to explain your answer because the question is for the 10 marks. What point you need to explain? The first point you need to mention, we must consider the market share. The market share will be more if we are selling the 900 unit level because our revenue will be 3 crore 72 lakh instead of 2 crore 70 lakh. So obviously, in order to enhance the market share, we will go for 900 unit level. Second point which you need to mention. Okay, ठीक है, हमने machine बड़ी लगा ली और 900 unit बनाने शुरू कर दिए. Do we able to get the raw material from the market to produce the 900 unit? Is the employees are available? Is the plant additional capacity, other plant, not only the plant which we are going to buy. Obviously, the factory floor side need to be considered. The storage space need to be considered. The labor hour need to be considered. Is the input factor available to me or not? So you must write if the input factor such as raw material, labor hour, storage space, factory floor space. If the input factor is available to me, obviously I'll go for the 900 unit. But despite installing a costlier machine of 56 lakh instead of a 40 lakh and making the capacity of the 900 unit, if you are not having the raw material to process the 900 unit, you only have a raw material of the 600 unit, then what you will do? You'll say, okay, no, we'll not wish to go to the 900 unit level, we wish to move or working at the 600 unit. Okay, so apart from suggesting based upon the profit or apart from suggesting based upon the financial aspect, you also need to quote these 2 points. That considering market share, we must go for the 900 unit level, but we also need to ensure that there must be input available to us. I hope this question is quite clear to you. It's a very soft and easy question. There is no catch in the question at all. Okay. Now we are moving to the another question. Target costing. Friend, this is the EVA question which we'll do in the next class. The question number 3 of this particular paper. Aman, it's mentioned on the question paper itself. It's downloaded from some website. You can also download from some similar website. Okay, some CA Rocker करके कुछ website है. You can download from that. Okay. Now read the question number 2, which is on the target costing along with me. NEC Furniture Limited is leading manufacturer and supplier of the furniture for the students of the pre-primary classes. So there is a company which is manufacturing the furniture. The full cost of one set comprising the table and the chair is 900 rupee per set. So the full cost is given to you. And what is the full cost? The full cost is 900. It means this cost. Aman, let me solve this question because I promised my other friend that I'll solve this question in the today's exam, today's class itself. And in the next class, we need to start from the EVA. Otherwise, it will become too lengthy for me. What's others' opinion? Okay, okay. I understand that it. Okay. I understand it become a bit heavy for you. Other students are also wishing that we must close this session right now. What I do, I'll read the question. I'll not solve the question. Okay. I must tell you the answer, that what should be the answer. Okay. The question is also saying Mumbai, no new question. Okay, done. No issue. Then what we'll do, then you need to promise me, then in the next class, you will give me 10 minutes after 9. Okay. After 9 p.m., you will give me 10 minutes. And this question of the target costing will solve in the next question. लेकिन हाँ जाने से पहले जो आपकी curiosity, I'll set it down. In this question, the price must be 1125, not the 900. 900 is a cost. Okay. The price must be 1125. This may be the curiosity among the various students. So we are holding up here for today's class. In the next class, at the end, after solving the question on the EVA, we'll solve this question of the target costing as well in the last 10 minutes. Okay. I agreed to both your point. Okay. No issue. Okay. Aman mentioned the profit to asset ratio. Aman, why you compute this profit to asset ratio? We are not, you can say that trying to compute the ROI. We are just considering the question from the chapter number 4, which we studied earlier together, and trying to solve those questions. Don't worry, Aman, if you have another query, you can write it down, Rajan. I'll answer to you over your email ID, which you mentioned here as well. Aman from Ahmedabad, not Aman from Delhi. Aman from Delhi, I accepted your point that will hold it up here. Okay. So if you have any query, I'll give you 2-3 minutes. You can write it down. As we are going to close down the session, we are going to sign off for today. Okay. Friend, in the next class, now please do come with the calculator, because starting from the session, we'll revise the various adjustment to the EVA and start solving the question. Okay. So do with the prepared set of the mind that you need to solve the question. It will be better if you are able to read few of the question. After EVA, we'll open the balance scorecard. Okay. I believe that in the next class, we'll be able to solve the balance scorecard. What I'll do, I'll send you some of the reading notes on the EVA as well, which only contain the, you can say that adjustment. It will become easy for you. It will be a kind of an handy table through which you are able to understand the various adjustment to the profit and the capital. Okay. No new concept. Okay, done. Bye then. Bye for today. Okay, we'll meet again on a Monday in order to understand the EVA and the balance scorecard. In the meantime, I'll send you the notes. I tried to send you the notes by tomorrow, first half, so that on a Sunday you can read the notes as well. Okay, enjoy the weekend. Bye.